Welcome back. Now, 2013 has been characterized by high Porsche sales and increased consumer spending, which prompted the Finweek team to take a closer look at the state of the finances of the upper middle class in South Africa. As we spend more time on this, Geoff Miller, president of TransUnion for Africa, and Derrick, Vries, assistant general manager at Wesbank, joins us at the desk. Thank you, gentlemen, for making the time. Perhaps having written the article, let me start with you, Mark. Definitively, who is the upper middle class? Because it sounds like we don't have black diamonds anymore, we don't have just a middle class anymore. Who exactly are we talking about?
It's a hell of a complicated question. I mean, in South Africa, for instance, I think the stat says that if you earn more than 3,000 Rand a month, you actually qualify as part of the middle class. Right. 30,000 Rand puts you into the super wealthy, depending on how you look at it. But so we have a very disparate income. The reason I got fascinated by the story was since January 2013 to August 2013, 1,569 Porsche had been sold in
How many?
1,569 new Porsche cars have been sold in South Africa, and it's a record year for them. And that just doesn't seem to add up when you look around and you talk to your social. So everybody seems to be under pressure. And I guess maybe it's a question I'll throw to the panel is South Africans seem to be in this whole fake it till you make it mentality. And Porsche almost seems to represent that sort of very high-end middle-class consumer. And I'm curious to know what the state of their finances are.
So let me maybe come to you, Derrick. Where are these people that are faking it until they're making it? Geographically, where do we find them? Can we put a category around them?
It's difficult just to put a category around them. I think most of the luxury vehicle sales or in the high end of the market is more in the Gauteng area and some of the coastals. But this market is very small, but also very stable. In our business, that contributes to the extent of 12% to our total business. So in our context, it's still very small, but very stable, very good profile customer that's actually buying in that segment.
So we say there hasn't been a real change in terms of that high-end middle-class consumer. You think it's been pretty stable year on year?
Yeah, growth year on year, 1.5%.
Okay.
So completely opposite to what we experienced on the other side of our business, where year-on-year growth were more towards 17%.
On the profile of those customers, are those people able to hang on to those assets, or are we seeing those cars rolled out at the end of the year when they run out of money?
Yeah, if you look at the quality of the customers applying for finance in that segment, 60% of that is on low-risk business. And also there's 40% of those customers that's actually buying cash and not even financing those vehicles. Sure. So definitely very good customers.
And what we've seen is the performance of vehicle asset finance loans continues to be very, very high quality. Right. Where we're seeing severe degradation is in unsecured lending and the performance of unsecured lending, but secured assets, both mortgage and vehicle asset finance, is doing very, very well from a delinquency perspective.
Perhaps let's just look forward a little bit and look at the demographics within South Africa and how those are shifting. And let me stay with you, Geoff. What are your prospects for the upper middle class moving forward? Are we expecting the good numbers in terms of spending power that we're seeing in that sector to continue for much longer? Yeah.
So I know retail sales surprised on the upside a little bit this month. But our prognosis is that they're going to continue to be muted. A lot of the retail sales growth that has been coming really has been funded by unsecured credit, and not necessarily in the upper middle class, but more in the middle class and lower middle class. All of the lenders in that space have severely tightened and constricted their lending criteria. So our view is that retail sales will continue to be muted as we look into next year and certainly in this festive season.
Are you concerned around the prospects of interest rate increases in South Africa? I mean, I know that it's been pushed, it's been kicked down the road a couple of times now, but it does look like 2014 is likely to see the first signs of interest rate increases. What are you guys factoring in there?
So obviously where interest rates hit you the most is in obviously a variable rate on your mortgage bond, and that's really what's going to drive an increase in your monthly cost. But if you look at the unsecured credit market, which was, the interest rates are already at 30%, so going up to 30.5% isn't actually going to be a marked increase in what they have to pay for credit. So we think obviously there will be stress with the rise in interest rates, but I think the consumers that are already under stress lending rates aren't going to make a huge impact to them.
I find the unsecured space very interesting because I think it's always been attached to the lower middle class. But even if you look around your own social circle, you can see more and more of your own, the genuine middle class using unsecured credit.
Yep.
Is there a time bomb waiting to happen? Is there something that's likely to fall over during the course of 2014?
So we look at overall delinquencies in the market on a quarter-over-quarter basis, up 13% in Q3. They were up 13% in Q2. I guess the good news is they're not increasing, but they're still at an elevated level. We expect delinquencies to continue to remain high through into next year. Lenders have tightened their criteria, and this just wasn't recently. This is many, many months ago. So the new vintages and the new credit coming onto the market is of a much higher quality. But there was a lot of lending done in 2010 and 2011 that I think still needs to wash through.
And sorry, Mark, just to go back to the spending habits. When you look at the upper middle class, are there sort of different segments that would spend on different areas? So, for example, we had the whole Black Diamonds phenomenon where they sort of conspicuous consumption, and then perhaps the more established, wealthy spend on travel, luxury travel, things like that. Do you see those differences still pretty entrenched? Or?
No, definitely not. I mean, the high value end of the market or vehicle market is very much in line with the rest of the industry in terms of our bank, the vehicles that we do finance. But we also see that in this segment, they're more resilient to economic uncertainties or maybe interest rate increases, because they do have other means of actually supplementing their income. They don't only rely on their salaries. They do have share portfolios, they do earn dividends, and they've got other sources to actually supplement their salaries, which makes a huge difference when it comes to being
How closely are
unstressed.
you guys watching the employment trends in South Africa? Because there seems to be quite a big shift toward informal, and I use it to informal in terms of their former entrepreneurs out there rather than drawing natural salaries. How much are you watching the trends that are happening in the employment sector in terms of how you guys are granting credit for vehicle purposes?
When we look at granting credit for vehicle purchases, we've noticed that the income bracket below 9,000 is almost exiting the market.
Jeez.
Those guys are not buying anymore. So if you look at the income bracket 30,000 and up, that's where the activity takes place. In this segment also, the income bracket is between 60 and 140,000 per month. So it does make a huge difference compared to the rest of the...
Has this had an impact in your business model in any way? Just the increasing number of upper middle class players that you're finding in that band. Have you had to rethink how you bring your product to market?
Yeah, I think if you look at Wesbank and what our strategy is around partnership with our OEMs and our dealer network. So we do take those things into account, but we also don't focus just on one specific segment of the market. We do cover the entire market, and I think that the one actually supplements the other when it comes to that.
And from a TransUnion perspective, looking at the employment market in South Africa, I mean, I've read a number of your reports, and it seems to be quite a negative outlook.
Yep.
And we haven't yet felt a lot of that in terms of impact on credit grantors, etc. What are your areas of concern?
I think the area that everyone's concerned about is just the sluggish economy, and that we don't see that turning around anytime soon. Employment numbers businesses are not willing to invest in new people and new positions. Credit grantors, as I've mentioned, have really tightened up their credit policy, but consumer demand for credit still remains quite high. So we're seeing consumers are continuing to apply for credit. There's just less that are getting approved for credit, or if they're getting approved, the lender is being more cautious around the amount that they're willing to lend that consumer.
I think it's really interesting that we started the conversation on Porsches, because I think they're the symbol of aspiring to be in the it crowd. And having said that, Derrick, from a used car perspective, are we finding that to clinch that status, that there might be a sector of people that are gravitating towards the previously owned high-end models just to be in that social circle?
Yeah. In this segment, interesting enough, 60% of the vehicles that we do finance is used, is second-hand,
Yes.
Of which a fair percentage is demo vehicles, where customers don't want to wait for, if there's a supply issue, they don't want to wait, then they will definitely go for demo models. But yeah, 60% is quite a high number in the segment.
Again, I just want to, and I think that this is a fair point, is talking about who actually makes up this middle class. And you know, we've seen the Unilever research in terms of what is broadly termed the black middle class that's coming through. Have you guys had to rethink who your consumer is in South Africa and segment better? I mean, we're talking about the 9,000, 30,000, 60,000. In terms of both credit profiles and I guess the actual lending for vehicle purposes, have you guys had to rethink the makeup of the South African middle class in the last couple of years? From
the bank side, no. If you look at the high income bracket market or the high value vehicle market, around 40% is executive, directors and senior management. Junior management comprise of like less than 10%. So when we do assess finance, we do look at each and every customer on an individual basis. Each customer is unique, and we then do apply our credit model or our assessment model based on the uniqueness of that individual.
And from TransUnion perspective?
Yeah, we don't get information on consumers' income. So we have a very, very good view of their liabilities and what they owe, but the credit grantors don't provide us actually the income that those consumers have. So difficult for us to get a very accurate measure. We do some income estimation to try and get a sense. But as of now, it's really how do we provide the most comprehensive information back to our customers, the financiers, so that they can make the most efficient lending decision.
In addition to Porsche, Cayennes, whatever it is that they're buying, do we have an idea of where the disposable income is going to broadly? And I know you would probably be focusing on vehicle finance, so let me throw it to yourself, Geoff, and ask, other than Porsches, what else are they buying?
I don't have too much level of detail, but if you look in general, right, the two largest purchases a consumer has is their house and their vehicle. And I think South Africa, actually, if you look at percentage of disposable income going towards a car versus a house, it's actually much different than any other nation. So South Africans do have a lot of status that they place around the vehicle that they drive, and so consumers are willing to spend a lot more of their discretionary income on their vehicle than perhaps someone from a.
And I would say Gauteng, right? It seems to be a bit of a Gauteng thing where you have to have the right car.
Actually, I'm going to challenge you on that, because what I heard is that if you want to go to the province with the highest number of Range Rovers, you actually go to Limpopo. And that's where they've actually made the most sales. Does that ring a bell?
Yeah, no, definitely. I think in certain brands, they spread across the country. So I also think it's the brand that do attract a fair amount of customers. But interesting enough, speaking about where they actually spend their money, 74% of these customers are also property owners. So they do invest in the properties as well.